Welcome back, everyone. As always, it is a blessing to be here. Before we jump in, do me a favor and hit that like button, share this with someone who's been asking about XRP, and subscribe with notifications on so you don't miss what's coming next. Today, we're talking about the shift everyone's missing. On July 15th, the DTCC took tokenization from pilot to production with over 50 firms on board, bringing the Russell 1000 ETFs and US Treasuries on chain. While ETF flows collapse and retail panics, whales just accumulated 70 million XRP in 7 days. I'm going to show you why that divergence tells us everything about where we're headed. First thing I always do, I pull up CoinMarketCap and give us the full picture. The total crypto market cap is sitting at $2.21 trillion. Bitcoin dominance is sitting at 58.3%. Fear and greed is at 33, which puts us in extreme fear territory. And I'll tell you what that means for XRP in a moment. XRP is trading at $1.1075. That's up 0.01% in the last 24 hours. Bitcoin is at 64,158. Ethereum at 1,887. This is a risk-off environment, extreme fear reading, but here's what matters. When retail is scared, that's exactly when the smart money moves. Let me pull up this post from Digital Asset Buy. Look at this DTCC countdown. This is the July 15th announcement that nobody's connecting to XRP. The DTCC launched its digital launchpad in production mode with over 50 major financial institutions participating. We're talking Russell 1000 equities, ETFs, US Treasuries being tokenized and settled on distributed ledger technology. Now here's the critical part. The DTCC did not mention XRP by name, but here's my take, and this is where you have to think through the infrastructure. When you tokenize trillions of dollars of traditional securities, you need interoperable settlement rails that can speak ISO 20022, handle institutional grade compliance, and settle cross-border in seconds, not days. That's exactly what XRP and the XRP ledger were built for. This isn't experimentation anymore. This is production. And the smart money sees it. Let me pull up this article from Finance in Bold. Right here it says, XRP whales scoop up 70 million tokens in a week. That's not retail. That's calculated institutional accumulation happening while price consolidates. And if we scroll down, this is the same week that withdrawal activity on Coinbase hit a 5-month extreme. The crypto basic reported exchange flows have turned negative. That is classic pre-move accumulation behavior. Now here's the divergence. Let me pull up this article from Crypto News. The headline, XRP ETF flows collapse. AUM slips below $1 billion. On the surface, that looks bearish. But ETF flows and whale accumulation are two completely different types of capital. ETF flows are mostly retail wrapped in an institutional vehicle. They're reactive, headline driven, and they panic. Whales are accumulating 70 million tokens during negative ETF flows because they're positioning ahead of something the ETF buyers don't see yet. And that something is the tokenization infrastructure that just went live and the ISO 20022 adoption roadmap unfolding right now. March of 2025, ISO 222 became the global standard for financial messaging. We're 4 months past that compliance deadline, the rails are live, Swift is migrating, and XRP is one of exactly 5 digital assets designed for ISO 222 messaging from day one. The DTCC's production launch is the confirmation that tokenized settlement is no longer theoretical. It's happening, and the whales are stacking because they can see the transaction volume curve that's coming. Let me pull up this other article from Pluang. Right here, Ripple warns rejecting clarity. Act risks 67 million US crypto holders to fraud without clear regulation. Ripple's chief legal officer is pushing hard because regulatory clarity is the final unlock. The Clarity Act would create a clear framework separating securities from commodities and crypto. For XRP, that means the end of regulatory ambiguity that's hung over the asset since the SEC lawsuit. When that clarity comes, and it's when, not if, institutions that pulled back during the lawsuit years will come flooding back in at prices a lot higher than $1.11. Here's the technical setup. XRP has been consolidating between $1 and $1.18 for 3 weeks. Volume dropping, classic compression before a breakout. On the daily chart, we're sitting right on top of the 21-day moving average at $1.08. That's immediate support. If we hold above that and push with volume, first resistance is $1.18. And if we clear that on strong volume, we're looking at $1.35. That's a 20% move from here. On the weekly, we're building what looks like a bull flag that started forming in April. We're at the midpoint. If we break up and out, the measured move takes us to $2.40. There's a massive volume gap between $1.40 and $1.70, which means if we break through 135 with momentum, there's not much resistance until 170. Here's the risk. If we lose $1.08 and break below the 21-day MA with volume, next support is 98 cents. That's the 200-day moving average. If we drop there, the short-term structure changes from bullish consolidation to possible retest of 90 cents. I don't think we're going there, but you have to know where the trapdoor is. Bitcoin is the macro anchor. Bitcoin at 64,158, down 0.68% today. We hit 65,000 this week, got rejected, now consolidating just below. As long as Bitcoin stays in this 60 to 68,000 range without major breakdown, altcoins like XRP have room to move independently, especially with a fundamental catalyst. We've seen this before. October 2023, Bitcoin range bound between 27 and 29,000 for 6 weeks. During that exact period, XRP ran from 48 cents to 74 cents on the back of the partial SEC court victory. That was a 50% move while Bitcoin went nowhere. And that fear reading of 25, extreme fear is historically a buy signal. When retail is terrified, that's when the best entries happen. The whales know this. That's why they're buying 70 million tokens during extreme fear while ETF holders panic sell. Let me pull up this article from the Crypto Basic again. XRP withdrawal activity hits 5-month extreme on Coinbase as exchange flows turn negative. When whales pull coins off exchanges, they're moving to cold storage for long-term holding. They're not planning to sell in the next few weeks or months. And this is happening as Ripple ramps up its engineering roadmap. New XRP ledger updates, DeFi integrations, side chains, and institutional custody solutions for banks. That infrastructure build doesn't happen unless there's demand coming, and the whales can see that demand in the pipeline. Ripple is also expanding banking partnerships in the background. They don't announce every bank anymore, but if you watch on demand, liquidity volume on the XRP ledger has been steadily growing. ODL is Ripple's product that uses XRP as a bridge currency for cross-border payments. Every ODL transaction requires buying XRP in one market and selling it in another, creating real organic demand. As more banks adopt ISO 222 messaging and integrate with RippleNet, that ODL volume goes up. That's what drives long-term price appreciation. Actual utility demand. So while ETF flows collapse and retail is scared, whales are stacking because they can see ISO 222 adoption playing out, regulatory clarity coming, and the DTCC tokenization infrastructure going live. When those converge, the demand side changes completely. That's what smart money knows that retail doesn't. Zooming out to macro, the S&P is at 75.72, up 0.38%. Nasdaq up 0.62%. Stocks grinding higher, but we're still seeing defensive flows into bonds and gold. Gold is at $4,036 an ounce, near all-time highs. That tells you institutional money is hedging. For crypto, we're in this middle zone where Bitcoin is treated as both risk asset and macro hedge. ETF flows show retail treating it like risk, selling when stocks drop. But whale accumulation in XRP suggests sophisticated players are treating digital assets like infrastructure plays. They're betting on the 10-year shift from correspondent banking to real-time gross settlement on blockchain rails. The DXY is at 100.55, basically flat. A stable dollar is neutral for crypto and actually fine for XRP because its use case is currency bridge transactions. It benefits from stable FX markets because that's when cross-border payment volume is highest. Here's my bold take. We are in the early innings of a multi-month XRP rally that most people will miss because they're looking at the wrong signals. They're watching ETF flows and sentiment, and those are lagging. The leading indicators are whale accumulation, exchange outflows, the DTCC production launch, and the institutional adoption roadmap playing out in the background. By the time ETF flows turn positive and sentiment flips to greed, XRP will be at $1.50 or $1.70. The Wall Street money sitting out is coming, but not on hype. It's coming on regulatory clarity and infrastructure adoption, and both are closer than people think. The Clarity Act is moving through Congress. The ISO 222 migration is 4 months in and ramping. The DTCC just took tokenization live with 50 plus firms. Ripple is signing banks we won't hear about for 6 months. The whales know all of this, which is why they're buying now while retail is frozen in extreme fear. One altcoin that did something interesting today connects back to the XRP thesis. Stellar XLM up 2.36%. Stellar and XRP are both ISO 222 compliant, both designed for cross-border payments, both benefit from banks moving off legacy rails. When you see Stellar moving while the rest of the market is flat or red, that tells you sector rotation is happening into payment-focused blockchains. Chainlink is up 1.12% today, also ISO 222 compliant, also an Oracle infrastructure play for connecting banks to blockchain. When these assets move together, that's smart money positioning in a basket of infrastructure tokens, and XRP is the largest and most liquid asset in that basket. Let's do the risk check. Here's the bear case and what would make me change my thesis. If XRP breaks below $1.08 and loses the 21-day moving average with volume, then breaks 98 cents, that would signal this consolidation is distribution, not a bull flag. And we're headed back to retest 90 cents or lower. That would mean whale accumulation isn't enough to offset selling pressure. The other thing that would change my mind is if the Clarity Act dies in Congress or gets watered down. That would delay the catalyst I'm betting on by 12 to 18 months. The third risk is if Bitcoin breaks below 60,000. If Bitcoin goes to 55,000 or lower, XRP will follow regardless of fundamentals. The 60,000 level on Bitcoin is critical. Here's what I think is most likely. 3 scenarios with specific levels. Bull case, XRP holds $1.08, breaks $1.18 on volume in the next 7 to 10 days, and we run to $1.35 by end of July. Trigger is either a Clarity Act vote getting scheduled, a major bank announcing an ODL partnership, or Bitcoin breaking 66,000. If any happen, we're going to 135. And from there, if momentum holds, we test $1.70 in August. 35% probability. Base case, we chop in this $1.08 to $1.18 range for another 2 to 3 weeks while Bitcoin figures itself out. We get positive regulatory news, but nothing major. Whale accumulation continues, and we slowly grind higher into August and break out to $1.30 in mid-August, 50% probability. In that scenario, use dips toward $1.08 to add. Bear case, we lose $1.08, drop to 98 cents, and consolidate in mid to high 90 cent range for a month. Trigger would be Bitcoin breaking 60,000, major negative regulatory headline, or broader risk off spilling into crypto. 15% probability because whale accumulation and exchange outflows suggest smart money doesn't think we're going lower. Here's what I'm doing. I'm holding my position, watching $1.08 like a hawk. If we dip to 105 or 108 on low volume, I'm adding. I'm not chasing $1.15. If we break $1.18 on strong volume, I'm holding for 135 and reassessing. If we drop below $1.08 and head to 98 cents, I'm tightening my stop. The key is having a plan for both directions. And this is why I keep my XRP off exchanges and cold storage on a ledger. Links in the description. When you're holding for a longer term thesis like the ISO 222 adoption curve and the DTCC tokenization build out, you don't want tokens sitting on an exchange. Cold storage forces long-term thinking. Here's the one thing I want you to remember. When retail is panic selling and ETF flows are collapsing and sentiment is at extreme fear, that is exactly when the smart money moves. The whales didn't accumulate 70 million XRP this week because they're dumb. They did it because they can see the DTCC production launch, the ISO 222 adoption wave, the regulatory clarity coming, and they're positioning ahead of the crowd. XRP is one of the only digital assets built specifically for this use case from day one. The price will follow the fundamentals. It just happens on the market's timeline, not yours. If this breakdown was valuable, smash that like button, drop your XRP price target for end of July in the comments, and if you haven't subscribed, hit that button and turn on notifications so you're here for the next one. As always, it is a blessing. I'll see you tomorrow.